Good morning and welcome to Options Center. This is a very special edition here of Options Center. We're doing an analysis of the market, but I want to emphasize the Fed Chairman Jerome Powell today flipped his policy, and I'll play this real quick. It's as simple as that right there, folks. It's time for policy to adjust. Usually I don't do a whole bunch of fundamentals on this channel. And sometime back I did a video on rates and what that will do to the market. And I want you to pay special attention to the TNX, the 10-year rates, which is opposite inverse of the 10-year treasury here. So as treasuries go up, rates go down. And I wanted to, what he said is going to, it's going to hit the market. It's the tail wagging the dog kind of situation. I don't believe that the Fed actually moves the market specifically. It is a catalyst, yes, but it's the actual 10-year rates that will fall, not because of Powell, but because of economic conditions. And that signifies a recession, and the stock market reacts to that. And Chairman Powell, Fed Chairman Jerome Powell will adjust rates accordingly to that. And that's what happens. So why am I saying all this? Okay, so now I have to adjust my thinking. I was talking about going to all-time highs. I think we react today. I think going into next week we'll have a very large move to the downside. I think we may have topped already. Okay, so I think we hit a top. I think we have a double top at this point. I will have an alternate scenario where we do continue to go higher, maybe into FOMC, where they actually make the Fed rate cuts. Okay, so it doesn't mean I have a crystal ball. I don't know if we don't make highs anymore, but I think in the past, the markets have started their move downward and topped before rate cuts. Okay, so don't think that we have to cut rates and then we get the move. The move can happen first, and then we can continue to move lower after the rate cuts. So that's the gist of this. So what I'm going to do is go through SPY multiple time frames. I'm going to keep it simple. I'm not going to go through, I don't think I'm going to go through anything else but SPY and the rates. And I think that will be the end, maybe the VIX. And I just want to show you this. We're starting to reverse right now, and the market's spooked. It will happen. I'm fully in puts. I did expect a move downward anyway, and we'll still look at those critical points to where I told you 520. We're going to continue with that. I don't think any trend lines are going to hold after this kind of notification, but we have to keep an open mind for more upside anyway. Okay, so that's what we'll go through. I think maybe I'll just quickly go through QQQ on the 65 minutes. So, okay, so let's go ahead and go to this. I'm going to make this video for everyone public immediately because it's huge news, and this could react for everybody soon. So I usually do these intraday. If you want to be a part of that and become a supporter, it's 99 cents, and consider that. So here we go. We have SPY 2000 top, 2021 top, and 2024 top here. Okay, so we had our reversal candle here. I believe that is good now, and that's specifically because what was said, the policy is adjusting, the economy is turning. This spike up here was a large reaction off the 8 EMA going into Fed Powell's speech here. And I'll go ahead and close this now. So this can be a hanging man. I don't know how the month, we're getting towards the end of the month, so this could be some sort of doji. We'll see how this candle reacts there, maybe we do eke out a new high. I don't know that for a fact, but this could end up being a possible doji candle representing, it could be a spinning top too if price goes down. So either way, this could be a even if the candle ends up red or so, or more green, I'm going to consider this probably a tweezer top. We have two reversal candles here. All right, so the biggest thing on the monthly time frame, over and over and over, just to talk about negative divergence. None of that has played out yet in the long run. Okay, this is a very high time frame, even though we've had huge moves, this one in particular, and way back here to 2018 is when it started on RSI. Even though we've had corrections in between, we're getting lower highs. Okay, so we're looking at this to start to play out. We don't have a sell signal on the monthly yet, so we'll keep that in mind. On the weekly time frame, so you're going to see my verbiage sort of change here now that we're in this condition of a possible recession. And I think likely, probable should be the words. So I was expecting a top like this. I don't think that's any longer the case, but we will keep this as our backup setup if price it ends up being strong. Okay, so we just want to keep in mind that we might just go ahead and get new lows at this point. And I'll show you how. So we have our top here from the channel top. I do think this possible next move might be a 1-2 setup as a double top. And then we'll probably get some sort of 1-2 and then continue a bounce off of something here like the 50 week. But this is a potential trend line here. And we have a couple more dash lines here and that we'll put in this. So this might be a possible spot for price to make maybe a head and shoulder here. Maybe this is a double head here. We have a left shoulder. We get down to here, good support. Make a right shoulder from a bounce as a 1-2, and then head much lower, 3, 4, 5. Okay, so that's going to be virtually what we're looking for. And of course, the short term is going to have to provide that sort of confirmation. And so on the weekly, we're going to have to adjust a lot of things. I didn't do anything yet. We are now in the situation where we're back at the target. We're rejecting off of it on the weekly time frame. We'll see how this candle ends up. It appears that it's going to be some sort of reversal candle at this moment, but we'll see where price ends up. And so ultimately, my game plan, even though we'll have something on the first, we'll keep that in mind that there's some relationship on the first. I'm looking for, and I'm not looking at the time frames yet, okay? This could happen pretty fast here, but I think we're looking more towards getting to possibly that 382. We get a bounce off of it in some time in price relationship. I don't have those worked out yet. Maybe our right shoulder. And it doesn't have to be very sharp either. Not in this kind of move. This is a 1-2 setup, and this could end up being much more shallow to the 382 or the 50%. We'll have to see what happens at that time, and continuing lower. Okay, and so these can come into any of the places that we have represented. I don't have all those set yet. We'll work on that with different projections and Fibonacci extensions and such at this point. But this is just a rough estimate of what I think might be happening at this point. Now that the Fed has virtually pivoted with his statement, and that is the important part, not the actual when the FOMC cuts those rates. I think we'll already have started our correction. That's what I think, but we'll have to watch price action. Okay, going into the daily, this would mean that we don't breach this 2021 top again. Okay, we have to get back under it. Of course, I'm projecting, but we have this bearish rising wedge. We're back testing that wedge, still with the lower high as of right now. Could be different today. And if we do tag a new high, possibly today, 56516 on SPY, then all that's going to represent is that we had our wave 4, a 3-wave move, and then we had our last wave up to complete this possible wave 5 here. So it you know, when I keep talking about those this Elliot wave counts, you can adjust them all the time. It's speculative, but that will give us structure for us to think, hey, all right, we got an all-time high here with divergence, and I guarantee you there's divergence on here. There's not at this point because we haven't made a high yet, but if we make a brand new high, even today going into next week or Monday, then this line extends, and then we'll have divergence here as well, which we're already starting to do, I believe. We're getting a sell signal here. So all it's going to do is create all these divergences. I didn't check any of the indicators. We'll go into more depth I'll check all these indicators and things later on. There's a lot to do with this adjustment. The ending diagonal. Here's the projections so far. Don't think this is the case. We'll work on time and price soon. Whether we eke out a new high here or this is the high, meaning a 1-2, not wave 4. So we'll see what happens. Maybe this is a 4 and this is straight up into a wave 5. Done. Okay, and then we start the count all over again where this is a 1 and we get a lower high 2. So we'll see how that happens. But if we get a lower high here, that just means we have a double top. And then we'll start another set of 5 waves to the downside. So I'll adjust all of these numbers. As of right now, if the top is in, this is wave 5. This will be the final up here. This will be wave 1 down here. And for the double top, we have wave 2 here and such. So again, if we eke out a new high here today going into tomorrow, it looks like price is kind of holding a little bit. We'll see. Either way, we're going to stay short because the price action is not going to reach these levels up here. If we do so, it'll still be a double top. We'll see if we eke out a high or not. I have my alerts on, and all I'll do is move this 5 over here. That's all. And our secondary scenario will still be this. Okay. So as of right now, we'll look for much lower prices. That will be our primary. And then our secondary will be the purple here. And I'll adjust the purple there as well. So we'll have a 1-2. And then we'll look for another 1, possibly into this range here. And then a pullback for a 2, and so on. Very big deal here today, guys. And this will, yes, I'll show you the VIX as well because that's starting to make sense to me. If so, we have our wedge. We touch the top of the wedge here into Jackson Hole. We'll see where this goes. So our critical points here will become, I think, in my opinion, will be pretty obvious. You have this little downtrend line here. Most people will be looking into that, into time and price. We still have the time relationships and price. So we'll look into those. And if it continues to break these, so I'll put some call hedges on. If it continues to break these, then we still have this critical point at 520 here into time and price as well. So I'll be, looking for call protection and things like that. And so this will start to come into play if we hold this here. All right. It's gonna really be difficult to change your mind frames. That's the hardest part, in my opinion, about trading, is to identify that you're in a trend. Okay, so this, in my opinion, is probably a lower high. We'll see what happens with the Qs, and that could kind of give us some clues there, because I can look at this as, I can make this a 1, 2. You see what I mean? As a double top, because this, I pointed out earlier in the last few weeks that this could be a 1, 2. I've already had this labeled 3, 4, and 5 for expanding leading diagonal for wave 1. That 5 for wave 1, pull back to wave 2, and much lower after that. Okay, so just, I know I have a lot of stuff happening here, and gonna have to ignore that right now. I'll talk you through it. I'm just looking for levels to be cautious about. So we're looking at this move here, and the secondary move is to eke out a new high going into FOMC. All right, and I'm just not sure that's the case anymore with this Fed pivot. And I'm going to label this for the long run, so we know that this was the Fed pivot, and we'll be able to look back on it and learn even more throughout time what happens when the Fed pivots. Let's go over to the Qs. And I think this will be a little bit more obvious on the Qs what happens, and ignore this so far. This will be, well, let me just adjust this. So we have a lower high going on in the Qs. It's a reversal off the 786 so far. That goes much lower. Primarily, this is our primary. And our secondary, because we have this sort of channel here, I know there's a couple touches there. People will be looking for that. I think this is a little bit more clear that if this breaks down into price, time and price, one of these, that will, change that. That's our primary. And so into time and price, we'll look for either a bounce or see if that brings us to it. Either way, this is an impulse wave. And so I think the Qs are done. Either way, no matter what happens with SPY, getting a new high and things like that, the Qs are going to make a lower high. It just depends if this is one. This is a real 1-2 setup, you guys. This is what gives the full life of our 1-2 setup. The question here, in my opinion, is maybe this goes into Monday and a Tuesday, the time relationship here, and ekes out a 786 here, a 786 pullback. This being the top, wave 5, 1, 2, 3, 4, 5 wave impulse move. For a wave 1, I'll put in all the waves later. Again, I don't want to waste your time here. So I'll put a larger degree wave 1. This is a wave 2. And we'll probably, that's what it seems like right now, is that we're going to eke out maybe a new high in SPY, where we'll move over that point here, but we have a time relationship going into Tuesday next week. This might be a really slow price action, but maybe we'll tag this 786 because we have unfinished business here. And that's a perfect spot for SPY to clear out whatever it's going to do, make it inch out a new high, and finish out its wave count. And then we can put our 1, 2 setup here, very, very large setup, and then much lower from there. Okay, so we'll be looking into this time reference. Maybe we make it high. It doesn't look like, it looks like we'll get a inside day at this point. So with that inside day, maybe we get a little pop into Monday and then a drop after that. So this will be our primary. Clearly we're going to make new lows after this. And if now this is what we'll be looking for into some of these lows here, does price want to hold going into FOMC? We get our reversal. Does price want to hold? And this will be our secondary scenario. But our secondary scenario is still going to be a lower high for the Qs. All right, it's all messy right now, but I'll adjust these. We'll get this going. And we could have topped here. We're in the zone. It doesn't have to touch the 786. It just happens to be some unfinished business there. Okay. And finally the VIX. And then we'll get this out to you. Now the VIX is starting to make a higher low. So ultimately, let's look on the daily. Daily time frame. This is a much bigger picture. We made an impulse move to the upside. Made a new high. We're making sort of like a wave 2 here to test the 200-day moving average. We're bullish above the 200-day moving average. We're holding the 50 right now. And now we're starting, in my opinion, an uptrend. So this thing's going to start moving. It's going to start moving a lot higher. A lot higher. And as high as possibly and higher than here. And you can even look back to, and because this is going to be a larger move than even 2008. You have back here in the 80s as well. I think we'll make a all-time high in the VIX with this kind of move. We have a spike here. I think this is the beginning, and now we're going to start an uptrend, very similar to these ones. Spikes, moves. All right, and as we break different levels to the downside, the market will react with the VIX and make higher lows and higher highs, and ultimately if a certain level breaks, we'll have a huge spike in the VIX, and the VIX will definitely spike and pull back before the market has its lows. So that's kind of it, you guys. That's it's a huge. Oh no! Oh my gosh. TNX. This is a very, very important part here. My gosh, it's probably the most important part, and I almost left it out. Sorry about that. Let me go back. TNX doesn't work by itself anymore. I have to add in other CGI here. No, we're not going to buy. Okay. All right, so the rates go down in a recession. I was looking at this when I made the video. We had a lower high, and we started to make a rising wedge, a bearish rising wedge. We broke down from it, and the market corrected as we made some lows, and we're really starting to move down now. And overall, this is, for example, the 20 Corona crash. Rates just plummeted because it was showing our conditions of the economy, and I think this was clearly the move that we've had since, with rates going higher. We've had some great moves in the market to the upside, but I think we'll start to see a continued downside in rates. Now, ultimately, we always have a trend to the downside for rates. And in 2008, rates go down, economy goes down, kind of thing, and continue downside. So we're starting to make highs here. There's not a whole lot really to look into. Is this, later in the future? Clearly, we're going to go down, in my opinion. But do we make a higher low now? I don't know. I'm not predicting what's happening. But we're going to get lower rates. We're going to get a recession in the economy. And this move is magnificent. So I don't know if this means that we're going to have higher rates in the future for longer, but for now, we're going to see a big pullback. And I like to use a ZB, but you can see treasuries go up, economy goes down, and we've spiked down, rates have gone up, and now we're going back to the upside. Okay, I don't know ultimately I'm not trying to predict what's happening in the future to this trend, but clearly we at least have to correct from this point. So we're going to see treasuries have a great move, and sorry. So I've been talking about in friends and families, and TLT tracking the bonds has been a wonderful play. That's in our IRA, my family's IRA. We've been getting paid to hold, and now it's going to appreciate. And it was a win-win situation. We might still have some, let's see here. It was paying out a dividend. I'll post all these videos up top so you can check those out. And we're a little slow here. So, yeah, we're still, TLT is still paying almost 4%. And that was phenomenal. We were getting at over 4% while we wait for appreciation and price too. So why not? These usually, for most of my trading career, have held around 2% or so, and they weren't that interesting, under 2%, and there's no real chance of appreciation so much. And so now we have this lifetime opportunity in bonds, such boring bonds, and I think that's what I named the video. And they're still appealing. While you wait for these things to go up, you're getting paid a good percentage, and they're just really safe. So yeah, again, I'll end with that. We have a lot of room to the upside for TLT. That's it. Have a wonderful day. We will catch up with a lot more details. Hopefully each and every day. I'll try to put something new out this weekend in order to get us on track with this mind frame that we may be in a downtrend as soon as next week. Or we may already be in it, but if we eke out a new high in SPY and SPX and ES, it's neither here nor there. It doesn't matter. Doesn't matter. We're just going to move over a number, the 5 from over here to over here. That's it. If it ekes out a new high, it's going to get negative divergence, and then I am going to be much more bearish that the trend is heading lower. Right now, I have to keep in mind that we still might hold a level and go up for new highs going into FOMC. If we eke out a new high sooner than later, it's done. I will be much more adamant that this 1-2 setup in the Qs and SPY is going lower, and then we will have a backup plan for the bulls, just to out of safety and just to keep that in mind. Okay, all right, that's it. I'm rambling on. Have a wonderful day. Have a wonderful weekend. Talk to you soon.